Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday, happy PCE Friday for those of you that just rolled out of our session at the Simple Trading YouTube channel and my Sector Secrets Mastery. We covered the way that I look at 830 hot zones. How do I trade them? What considerations do I make? What's the reality about risk and which asset classes we would trade during those kinds of hot zones? If you're curious how I day trade specifically futures during hot zone releases, think initial claims, non-farm payroll, PCE, CPI, GDP, that whole alphabet soup. How do we tackle those 830 hot zones? Check that out. The replay is available. All right, so let's get to it. Again, happy Friday. Good to see everyone. If you have any questions, feel free to type them on in. Hey there, Ann. Thank you for the weekly trading plan video. Oh, right. Thank you, Ann. Quick reminder talking about replays. Actually, let me show you here really quick because we're going into the weekend. And if you want to check out some content, a couple things. When the dust settles is an update that I did just a couple days ago. This is about the aftermath of earnings. So we have that window into earnings. You can check that out at countdowntrader.com. And over at countdowntrader.com, I explained my 642 earnings window that I've been using for decades to trade up into the hot zone of earnings. And then how long do we wait until after, right? A couple really interesting stocks on our watch list today. Merck, AbbVie, their impact on the XLV, all at interesting levels for potential support after a weakness on the earnings and an overall somewhat bullish Q2 benefiting rotation. So speaking of the rotation, why would we be talking about XLF and XLV? So yesterday, I walked y'all through the guide's weekly trading plan guide. And if you check that out, this is about it was 50 minutes. Wow. I spent about 35 minutes going through, what we have been doing in that newsletter, what it's designed to do, how that mapped to the charts, and what it is that my weekly homework. I'm going to start doing that today. I will be getting back into that topic today. I'm going to sit down here at my desk and start working on, where are those factors that have traders and investors' attention, slightly bigger picture, meaning more daily time frame oriented levels and movement. And then what would we expect to see over the next week, right? Not the next 6 months or not the next year or some pie in the sky high or some apocalyptic low. Rather, what is realistic over the course of the next week? And then much like a really good soap opera, which is how the markets tend to behave, we layer each week's story to get that big ongoing picture, right? And we're always looking at the market from an opportunistic perspective, right? We always want to be opportunistic, which is to say we kind of want to be, optimistic, right? A lot of newsletters are very pessimistic. They like to talk about everything that's wrong with the world and how the markets are going to tank and everything else. And all I've got to say is, how's that working out for you, right? There are always opportunities because outflows in one corner of the market typically mean inflows in the other. And that's where we want to find where's the attention shifting to. Where's the attention? Volume, money, right? That gives you a pretty good idea of what it is that I'm looking at week in and week out. All right, so let's jump on into this post PCE morning and see what we've got. As always, if you have any questions, feel free to type them in. And good morning to our trading room. Good to see you all there. All right, so let's get to it. So let's start off with the ES. So S&P, Euro, and bonds. So ES, ZB, or ES 60 and ZB. So here's our ES. I almost wanted to tap my monitor and say, is this thing working? Did my internet cut out? What's going on? Very little volatility in this morning's PCE. Very, very little. And then if we take that to the second place that we would look for clarity, we jump on over to the FedWatch tool. We just continue to climb in just the absolute expectation of that quarter point hike in the May 3 meeting. Now, remember, again, we have FOMC on May 3. We have Apple on May 4. So we have still a very interesting handful of weeks still to come. But really, the most important thing about going forward in what's happening in this environment is June and July. June and July. June, hold. And even more convincingly than when PCE first came out, roughly 30 minutes ago. Hold in July, even more convincing, right? In fact, the quarter point cut and a quarter point hike are pretty much neck and neck. And what we have here is the hold column, still very convincing. It's the tallest column. That's what it's all about. It's the tallest column. Then we go out into September. All right, this is really where it gets far more interesting. And we're in very much a drag race between who is going to dominate psychology. Yet another month of a hold, or we finally get that Fed pivot and the quarter point cut. That's September, and the conversations are going to become very interesting at the end of Q2 and the very beginning of Q3. Look, I don't care what Fed Powell said about they don't have it in their sights. This is also the same group of people that said they don't see inflation either. They can and will change their minds. I'm not blaming him. He said what he thought was true, right? He said what he felt, which is they don't have it in their base plan or whatever that phrase was. I think I put it in one of the newsletters a couple of weeks back. The fact of the matter is the data is what's going to change your mind. And believe me, Powell and company know what these Fed fund futures are reflecting. And they are quite aware that if by September there is not a pivot and by November we're not cutting, there is going to be an absolute tantrum thrown by the stock market. This is as much a contract to reflect what we think the Federal Reserve may do as it is a communication device to the Federal Reserve telling them, this is what we expect you chuckleheads to do. And when those two things are misaligned, what the Fed says and does with what this is reflecting, you end up with the kind of action that we saw in March before the regional bank crisis, where Powell came out sounding crazy hawkish. He had, I don't know, a double espresso that morning and hit the mic and sounded extremely hawkish on day one of that Humphrey Hawkins testimony, which is about 3 days before the regional bank crisis, where the you-know-what hit the fan. Very hawkish. Fed fund futures were not aligned with that. The equity markets were not aligned with that. The bond market was not aligned with that. And we saw that abrupt shift that happened. So this is why I say it's so important to have a measuring stick for what we expect. And that is one of the places that PCE is going to affect the most. All right. So pretty simple, right? I mean, this isn't as, I think a lot of times macro becomes this sort of odd rabbit hole that a lot of folks go down. The idea with any analysis is when we're done talking about the concept, Rog, what does that mean? I'll tell you, it's the same thing that I've been mentioning in the newsletter now for about four or five issues, which is I'm bullish. And here's where I'm bullish. Healthcare, financials, XLF, not KRE, bullish the ES, bullish the YM. I am quite bullish because if we're heading closer and closer to a Fed pivot, I sure don't want to be short, right? Where else am I bullish? We've talked about gold. We've talked about silver. So this is where all that discussion lands somewhere for us to have an actionable idea. All right. So by the way, I'm mentioning this for those of you that want a better idea of what I am doing from the perspective of the analysis we're talking about. This week, actually yesterday and today, that this week in the market is on sale. When there's a sale, I like to tell you all. So I think today at midnight it ends. So if you want to join me in this week in the market, check out simplertrading.com this week. All right. If you want to hang out with me for a quarter, cool. That's 12 videos. That's 12 issues. On Friday, you get the video. On Monday, you get the new issue. So you get 12 of those for the next quarter. If you want to join me for the year, 52 videos of what I'm looking at and why, 52 issues. Right now, they are on sales. I always like to let y'all know when stuff's going on sale. All right, so that is what we've got there. Let's grab the questions, gang, as always, the best part of our show. And what do we have up first? Let's see here. Hello. Good morning. Hey there, Matt. How are you? I saw my YouTube live yesterday, but my chat. Oh, sorry about that, Matt. Crazy. What do flows tell me? Positive flow chart QQ. Oh, what does that mean? So the two concepts I introduced. And again, if y'all want to check out the replay that Matt's referring to, you can check it out over at the Simpler Trading YouTube channel, Raghee's Guide to a Weekly Trading Plan. What is it? It's how I sit down here in my office and do my homework to prepare for the next week. So first of all, there's two questions here. Let me unwrap it. What do flows tell me? Attention, Matt. It's attention. And what the flows told me in the cues was that attention was starting to wane. Not that it was going to break down, but that the higher highs that we saw, the surge that we saw at the end of March was not to be expected as we go into April, because it was at the top of the Ferris wheel. It had benefited from strength throughout Q1. The transition from Q1 to Q2 is a lot more about bargain hunting, even dare I say bottom picking. And that's where in the newsletter and in the analysis and what we discussed in Sector Secrets was, hey, who is poised to start to benefit from this bargain hunting? And it was financials and it was healthcare. So that's that Ferris wheel. Do flows and Ferris wheel actually work together? No, but ideally they should start to give us inklings as to, well, if Qs are looking a little bit lethargic on flows, we start to see a little bit better positive flows into healthcare and financials, that syncs up with the Ferris wheel. So flows will help, but we start off with sort of the watch list of the Ferris wheel. So I hope that makes sense. And that's the process. All right. Next up, hey, do I trade the bond market? Nick, I do. Yes. So when the bell's going to ring here in about, what time is it? When the bell rings here in about 27 minutes, yeah, there's my clock. When the bell rings here in about 27 minutes, 17 minutes, I will look at a specific number of symbols. Nick, I'm going to look at the indices, 6E, YM, and Q. That's where I'll start. And then I'm going to move on to just see where crude oil is. It's kind of on its own. And then I'll move on to ZB, 6E, GC. Now, along with ZB, you can look at the 2-year. You can look at the 10-year. I'll look at ZT and ZN as well as ZB. And that's that. So absolutely, we look at treasuries. We trade treasuries. And what I like to do with treasuries is get a feel for what we're expecting from yields. That goes right back to a lot of what we would see in the FOMC expectations, right? So bonds really should be, really should be, for the most part, indicating lower yields, meaning TLT should be moving higher, ZB should be moving higher. It'll probably start, the first clue we'll likely get is ZT, right? We'll probably see the 2-year note start to move, because that 2-year note's a great place to look in terms of an additional confirmation via another futures contract to understand what Fed fund futures are expecting in terms of those lower yields. We really want to see, so if you want a line in the sand for a more convincing look at a more dovish or accommodative Fed come Q3 with a Fed pivot, our Fed pivot sort of indicator can be, obviously the Fed Watch tool and the Fed Fund Futures contract, but getting above the 200 on the daily time frame of the ZT will be really, really important. Yeah, for sure. All right, next up is, can we take a look at Lilly? Sure. Sticking with the trading view charts? Yeah, absolutely. Okay, when we are looking at Lilly, so let's do this. First thing, Thursday after the bell. So today, the 28th, is the first day that traders broadly, PK, will have access to Lilly to express their opinion. Yes, if we get movement to levels that would be support, obviously, maybe not obviously, for folks who don't know what this tool is right down here, this is my directional bias tool. This is the tool that tells me I have an uptrend. and I want to look long. I want to look long calls or long stock, just be bullish. And if Lilly, Merck, AbbVie move higher, that's going to bode really well for the open XLV trade we have in the mastery. However, when it comes to LLY, I need a little bit of a pullback, and I would ideally PK look at it on Monday, because today is really sort of when the opinion's going to hit the stock the hardest, because again, after the bell earnings, kind of like Microsoft comes out, the next day is when we get to all express our opinion during the more liquid hours of trading. That's today with Lilly. So give an earnings stock about 1 to 2 sessions before you hop in. Let the dust settle, right? Which takes us right back to this video. Let the dust settle if you haven't checked it out. All right. If you go to Simpler Trading and click on videos, there it is. You can check out when the dust settles. And that's my process for, well, frankly, how long do we wait? Yeah. How long do we wait? Let's see. Sandra's saying the link isn't working. Oh, that's not good. So it should be simplertrading.com/this week. Let me check. It's a little slow, although it could be my computer. I don't know. I always check my speed if anything's a little clunky. But yeah, if you go to simplertrading.com and check out, let's see. Yeah, simplertrading.com/this week. There you go. There you go. All right. So simplertrading.com/this week. All right. Next up is, let me see here. Actually, let's go back to this post PCE environment. We had the questions on bonds. Okay, bond futures. Here's our ZB on the daily. Bond futures are moving higher. Now, unfortunately, or fortunately, depending on whether you're a futures trader or not, we hit the lower end. We hit the support of the daily price movement range today. And we're actually now at the resistance. So that was a nice move in bonds. Anytime we're down at the DPMR, I would recommend looking for a quick move over the course of 1 to 3 days to the upside. So bonds are already making that move. And if we're moving higher on bonds, we're moving higher on TLT, and that means we're moving lower on yields, right? Another thing I want to look at is what's going on with the US dollar. And the easiest way to do that is take a look at the 6E. Take a look at the euro. And when you take a look at the euro, I do want to be a buyer. The last time we had that opportunity was right in there. I'm looking for another opportunity. We've got the volatility, and I've got a nice volume ledge in here. Wow, that's a really great, wow, that's fantastic. So I've got daily price movement range and a volume ledge. Okay, excellent. So that's another thing I would want to look at in terms of a potential long position. And then let's see here. What's ES up to as we get closer and closer to the bell? And ES is, so here's what I'll be telling my folks in the mastery in just a bit. All right. First of all, this is the close, the previous session close. It's something I call the line in the sand. There's generally a bullish bias above that and a bearish bias below that, right? Getting above the close today could, in and of itself, be a bit of a bullish trigger. And what would that be? Getting above 41.54. I'd keep an eye on I'd keep a very close eye, gang, on 41.54 in the ES. All right. That's going to map to SPY. That's going to map to SPX, right? It's going to map to those, but it's going to start with the ES getting above that level. That should trigger some decent Momo if we can get above it. On the NAS, that level is going to be 13,232, 235. So keep an eye on those, gang. Keep an eye on those. All right. How do we get the daily price movement range indicator, and is it on TradingView? The daily price movement range indicator is a subscription, and we update this about every 3 to 4 weeks, I'd say. And ultimately, what we are able to do is keep up with the volatility patterns of the S&P, the NASDAQ, Dow. I think we got over 107 or 110 symbols, something like that. And so we keep this actively updated to reflect the most accurate volatility zones. So it's much like my hourly price movement range, but I apply this to short-term swing trading on the 1 hour and the daily time frames. All right, Earl has a question. How would I expect the market to react if the Fed holds next week? Earl, that would be very interesting. And I think at face value, some folks might say the market will really rally, right? If we have an accommodative Fed. But actually, and it's kind of a very, so let's speak in probabilities. We can always talk about what if, but we can talk about what if aliens land, and are hovering over Manhattan next week too. That's kind of what that process would be if they hold. They could, to your point. I think the market would sell off. I think we would see a fairly dramatic sell-off, because what that would communicate if we were actually to hold, to stay here, which, you're not alone, Earl. There's about 15% of folks that think they could hold in May, but we're over 80, which is to say this is discounted and extremely likely. But as much as we might say this would be very, very bullish, the Federal Reserve's accommodative, it would probably signal that the Federal Reserve knows something that's really awful, and that's why they didn't hike. So I think there might be initially a woohoo, and then I think the markets absolutely freak out because the Federal Reserve did something that they were not expecting them to do. And that means they're seeing something far more awful in the tea leaves than we know. So that's the way I would look at that, Earl. Very low probability, but that is what I would expect the indices and the equities to do. All right, gang. That's a wrap. I will see you all on Sunday for this week in the market live. And again, if you want to start getting the videos and the newsletters from me every Friday and Monday. So Friday we get the video, Monday we get the new issue. Check out This Week in the Market, simpletrading.com/this week. It is on sale. All right, gang, it's going to be on sale till midnight tonight. Be good to each other, gang. I'll talk with you soon.